Hi, everyone, and welcome to the TimingResearch.com Analyze Your Trade, episode number 128 for June 2nd, 2020. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we will be analyzing your trade ideas. So we are recording this live at 4 p.m. Eastern Time, and today I have arranged for Tim Racette to be the guest joining us today. And Tim has been on other timing research events several times, but I think it's first time on Analyze Your Trade, so happy to have him here. And Jim, the option professor, will be moderating, so I'm going to go ahead and turn it over to Jim.
Great. Thanks, David, and thanks everybody for being here today. We're having a kind of a sideways day pretty much in the market, but still positive despite all the rioting and everything else going on. With regards to today, we have Tim Racette with us of E-mini Mind. And Tim, could you just introduce yourself a little bit and what's going on over at your company?
Yeah, thanks, Jim. Thanks, David. As they said, my name's Tim Racette, and I blog over at E-mini Mind. I primarily do a couple of things. I swing trade the stocks and options, as well as day trade futures. Lots of videos and things if you search E-mini Mind on YouTube as well, or just check out any of the videos at the website. I'm primarily, looking to trade with the trend, as well as, getting into some longer swings when it comes to the daily charts. So today we'll talk about some of my process, things that I look for to get in and manage trades, and we'll run through a good list of stocks here.
Great. And at the end of the broadcast, you'll obviously let everybody know how to get more information from you and your contact information, stuff like that, right?
Certainly.
All right. Well, let's start out with the A's, and it's going to be Amazon, which has obviously had a huge move in the last 2-3 months here, from 1,600 all the way up to as much as about 25. And what are we thinking here at this level?
Yeah, so I'm actually long Amazon from the 28th, so above the high of this little dragonfly doji hammer, whichever you'd like to call it. And the reason for that is, we've already got through their earnings announcement. The longer term trend, if I pull back to a weekly chart, is very strong. And when I relate Amazon to the broader market, like the S&P, I go back to the daily chart here. What I like to do is compare, okay, what does the S&P or the SPY or the NASDAQ, what is that trend like? So we've kind of got this, swift down move and then about 60% retracing back up. So then if I compare that with Amazon, we get a much stronger chart setup. I can get my chart loaded here. There we go. So as I look at Amazon now, we can see that, about the time the S&P was down in the dumps, it didn't take very long for Amazon to already return to new highs. So Amazon has relative strength, and therefore it's on my buy list. And so when I get a list of stocks that are relatively strong to the S&P, I'll put those on a buy watch list, and then if I get stocks that are relatively weak to the S&P, I'll put those on a sell watch list. And then I just simply wait for these pullbacks to occur within that trend. And so the latest one happened here on the 27th, a little pullback. I just put a order above the high of that candle on the 27th, and then I've got my stop below the low. What are your thoughts, Jim?
No, I just was wondering, when you're, so listeners can understand your process a little bit, if you get into something at a certain price, what type of exit strategy or risk management are you doing at that point?
So the really nice thing about trading stocks is you can keep the same dollar amount of risk on every position. And so you're going to adjust the number of shares you buy or sell in order to keep that risk contained or controlled. So if we look at the high of that hammer candle on the 27th, and let's just say we call it a 2414 as the entry, and then the low of that candle is a 2330. So if we take the difference between the entry price and the stop, we can divide that into our risk. So if we wanted to risk, $1,000 on the trade, you can take that distance between your entry and your stop, divide that into the $1,000 risk per trade, and then that gives you the number of shares to buy such that your risk remains at $1,000.
Gotcha. So that's basically the way you try to manage the risk, and obviously external factors that happen, obviously cannot be accounted for all the time, but that's a basic premise of what you're trying to do.
Yeah, if you think about, what could be the worst case scenario. So if you put on a position and the very next day it gaps against you beyond where the stop is placed, so in this case below the candle's low,
Mm-hmm.
what I like to do is wait out the first 15 minutes
Mm-hmm.
and then put my stop below that candle's low. And it doesn't happen as many times as you would think,
No.
gapping the very next
Right.
day beyond where your stop is. But
Right.
that's a little trick I use to stay in the trade. A lot of times if a stock does gap against me,
Mm-hmm.
whether I'm, a week into it or it's the very next day,
Right.
if I wait out that first 15 minutes, then I can stay in it a little bit longer.
Yeah, sometimes you've seen that the first 15 minutes is a very emotional period, and then after that, cooler heads prevail, that type of thing.
Yep, absolutely. And there's been a couple of trades this year that I've been able to stay in because of that. And, it gapped against me briefly in the morning, never broke that 15-minute low, and then was off and running for the next few days.
Yeah, on the longer term moving averages, the 3-year moving average was never violated even during the drop down towards 1600. So if you're using longer term averages, you really got a good buying opportunity when it did go into that 1600 region. And obviously the numbers speak for themselves, and everyone's very familiar, how much business they've been doing with with the coronavirus. Huh? So it's good.
Yeah, I don't play too much into the fundamentals. I just make sure that I'm not putting on a position right into an earnings announcement.
Some people are thinking that you'll get an opportunity to buy it down around this 2200 area, which was the former high. Do you have any way of quantifying a probability that that could occur, or what do you think?
If we were to roll over here and come down and break this low, that would solidify this as a lower high. And, the 2200 seems, if you use this low back here, about
Mm-hmm.
2255, that could, constitute as a double bottom. But 2200 kind of lining up with just the prior highs, pretty simply. You could draw up a 50% retracement and look around. Okay, that's a 2075,
Mm-hmm.
that area. But as of right now, the momentum's there. Nasdaq's on its way to all-time highs, and
Right.
S&P is also breaking some highs from earlier last week.
Yeah, the momentum definitely has been quite good, as people have nowhere to go with their money because money market's at zero.
Mm-hmm.
All right, well, let's switch over to the next one, which is another very, very popular stock as far as volume is concerned, and that's AMD. And again, another one that's had a big run. I guess, the hard part with people looking at things if they didn't own something is it's very difficult to look at some of these charts and just starting to put entry level positions on. You know what I mean? Because, you see the chart is already so advanced. But if you're trading them on a short term basis, that's not so important, I guess.
Yeah, one thing I like to do is keep tabs on stocks that are making new highs.
Mm-hmm.
So like, back here, AMD's up in kind of high territory. Let me go to a weekly chart. And you can see, okay, Amazon or AMD is certainly, up in high territory. Let me put that on my radar, and then let me come back to it when it does get more of a pullback.
Mhm.
And that way, I'm not just chasing it as it's making the breakout and the media coverage is, hyping it up or being
Right.
talked about.
Right.
So now with AMD, what I'm seeing is a little bit of a downtrend up here, or at least lower highs being put in. You could certainly make the case that we've got a double bottom here. And so we've got the highest high back here and then some lower highs as we move to the right. But the other thing that stands out is a little bit of a triangle. So if you look at just kind of connecting the lows roughly, whether you use the bodies or the tails, it's really not that critical in my opinion. I like to use the bodies and then just kind of connect some of the bodies from the top here. So you can kind of see us converging around, 55-ish. And so with a setup like this, if I were to just, you could jump above an entry above the high of this low bar on this hammer, but we may end up putting in one more lower high and then coming back down. So if you do want to wait for a little more confirmation, you could wait for a break above the downtrend line and then look to get in on a pullback. And I'm talking long in this case.
Yeah, on a longer term basis, when it had the big drop during March, it only went down to the 1 year moving average around 38. It never got anywhere near the 2 year or 3 year moving averages. So this stock in particular is one of the strongest stocks on the board. So obviously, yeah, they got a great market share, and people do not want to sell it very often.
Mm-hmm.
And that's not a bad backdrop if you're trying to trade it from the long side, right?
Yeah.
Yeah. All right. Well, that's AMD. Let's go over to CLX.
So with
Clorox, yeah.
CLX,
Mhm.
when I see these big spikes and then big drops, it kind of breaks the chart a little bit. But when I look at what was occurring to the left of the kind of the upside down V, we have a pretty solid trend. And then when I look to the right, we kind of have that resumption of the pretty solid trend. So if we just kind of ignore this area, other than the fact that, okay, we did go up to about 214 as our new high, um, I'm not a big fan of buying at this juncture. You kind of, I'd prefer to either buy the true breakout above a swing high or buy uh, lower above the high of a low bar on the pullback itself. But as it stands today, we're kind of in that middle ground. So if we do, if the S&P makes a bigger pullback, and that's enough to pull this stock down a couple of days, I could see buying above the high of a low bar on a pullback. But if the S&P continues higher, then I would want to see CLX to go higher as well, coming back to that relative strength and relative weakness. If the S&P goes up, or the broader market, the Dow, the Nasdaq, and if those markets are all going up, and then CLX is moving sideways or down, well, then that's showing that there's some relative weakness in the individual stock. And the benefit of being able to trade individual stocks is you can pick the ones that are relatively strong for buying and relatively weak for selling.
This is a consumer product company, and obviously it's had a very inordinately large run because of the virus, going up about 40% in the last couple of months. And I'm wondering, as we get into the restart, if some of these, shall we say, virus type stocks, they may have more difficulty.
Yeah, it's certainly a possibility as, you know, some of these companies that may have increased supply or increased their production, will they be able to sustain that growth? That's hard to know. But from a structural standpoint, I mean, even if you go back from before March, before a lot of the virus stuff, it's kind of chugging along pretty
Oh, it was,
nicely. So
yeah, it was in an uptrend, no doubt about it.
Yep.
Yeah. One thing is your swing trading. I just was wondering for people who might be out there wondering, what is the zone of time frame that you work with?
So I'm a big fan of trailing my stop, and I'll
Okay.
trail my stop in a couple of ways. Um, so really, as long as it's going in my favor,
Right.
making higher highs and higher lows
Right.
for a long setup. It might be a week, it might be a couple of weeks or a couple of months if it's a really tight, like we saw at the beginning of the year, just a tight uptrend.
Yeah. I think that's very smart. I think letting the market kick you out makes a lot more sense than cutting a gain off and then having it continue up and up and up, especially in a market that's coming off of a crash, because something you think has gone too far may have a lot more to go. And just the ones we're looking at, the first three we looked at, somebody might have got out of those very early if they didn't use that trailing stop idea. Do you ever use options in connection with what you're doing? Because, me being an option guy, I look at these stocks so far away from their moving averages and stuff, and I think that they might be candidates for a covered right or a collar up here.
When I do use options, it's very simple. I'm just using directionals. So like for an Amazon, if I don't want to, fork out the capital for the underlying because it's more expensive,
Right.
I could use a couple of options. But primarily, I'm trading the underlying stock just to
Make money on.
avoid,
Yeah.
that time decay.
Yeah. Yeah. Okay. Well, let's go to the next one, which is SPCE, and see what's going on there.
So when I see a stock like this, that's in somewhat of, well, two things. A stock that's below $20 and a stock that's kind of in a tight sideways range. Um, I don't get too excited. If you're
Mm,
looking at it as a short, there's really only so much room it can go before it hits zero. And if you're looking at it as a long and trying to speculate on some long-term play or some fundamental news, you can be waiting an eternity for something like that to happen. So I don't see a whole lot here that would give me really a strong indication of either direction, long or short. You got a double top right here, but then you also have you can make a case for higher lows in this
yeah.
regard since March, but kind of compressed and just moving sideways.
Would this instigate a little bit of a buy if it say broke 20 and then put a stop underneath 15 or something like that?
I would prefer to see it make a bigger break
Yeah.
to like 25 or 27 and
Okay.
then maybe pull back to the double top and see that as support.
Okay. And play it that way. There's a
Yeah.
lot of sharp people in this company, well-respected people. So I think people do think that there's a big potential to it, but it's obviously very volatile. People jammed in there and paid $42, and I'm sure they're not too happy about paying that. Huh?
Yeah, there's so many factors from the fundamental side and the long-term, investors or folks that are shareholders side that it can really, it can linger, and then all of a sudden spike when you least expect it.
Yeah. Well, the next one up, everybody loves. This is Microsoft. It's the company that just keeps giving, MSFT. And I guess they're getting into the Zoom business with Team, and I guess they're getting into the Teledoc business as well. So between the cloud and these other things, this company, some people think, is really got a big future above $200. What do you think?
Yeah, I think your Microsofts and your Apples certainly have their feet planted well in the you know in their industries. Actually, this was one of my bigger winners for the year from the start of the year. From the long side, just getting long and then trailing the swing lows, and then as we really start to take off, just kind of trailing each daily candle's low, just keeping my stop underneath that low every single day. And then, obviously, if you took this snapshot and looked at the S&P, pretty much the same type of thing happening, except Microsoft is closer to its highs. So where the S&P is maybe bounced 65 or 70%, Microsoft is certainly almost at its all-time highs. So the shape might look similar, but definite relative strength. We've got kind of that double bottom with these two days here, and slightly forming a triangle or a wedge. So I like Microsoft for the breakout. If you want to get a little bit ahead of the actual 191 breakout, like a 165 area would be what I'd look for. And, if you want to use an option for something like this, you could certainly structure something more advanced. But if you were just, going directional, trying to give it, at least 2 months. If you were looking at the June option right now, you're only talking about 3 weeks till expiration, and you're not really giving yourself quite enough time. Just as I look at the last 3 weeks of consolidation, I wouldn't expect it to necessarily go to 200, this week or in the next
Right.
couple of days.
Right. Because it's had a good run and it looks like it is taking a little pause to refresh. Huh?
Mm-hmm.
Yeah. And it certainly deserves it because that's a heck of a run it had from 130 up to 190. Huh?
Yeah, and you're right with the innovation that companies like Microsoft have been, working on through this virus. There's definitely a lot of things that will, come out the other end that I think will reflect positively on Microsoft.
Yeah, sometimes when I look at a Microsoft, I say to myself, if I really like this company, maybe I could go out 3 to 6 months and sell a put at say 165 or 170, something like that. I'm willing to buy it at that level, and
Mm-hmm.
then take the premium and buy yourself a 195 call just in case it doesn't come down. And
Yeah.
then you've got a situation where you've got a window of opportunity. They'll give the stock to you down at 165, or you got a right to buy it at 195. And if they both stay in between, if you can get the premiums to match, it's really no harm, no foul.
Yeah, and that's a great way to to swing trade and build a longer term portfolio at the same time.
Yeah, because that strategy can be used with any time frame, right?
Yeah,
Yeah.
absolutely.
Well, let's switch over to the oil market. Looks like somebody wants to talk about Chevron. And Chevron obviously was in the doghouse during the crash, but had come back very strongly. And they are very much trying to defend their dividend. And that has caused people to bid it back up.
Yeah, this is another one that's just kind of in limbo. If you're going to take a speculative play, you kind of need to do it, when the stock's been cut in half,
Yeah.
120 down to 60,
Right.
and be looking at, same with the airlines, looking at when it's cut in half. Well, when we're up in this region,
Yeah.
your risk is essentially returning to lows, and then your
Right.
upside is only about the same size as your risk. So not super exciting
Yeah.
for me.
It's really more of a longer term guy, get the dividend kind of deal.
Yeah, and that's, again, if you want to do some kind of spread to kind of hedge that risk, if you like it
Yeah.
as a long-term position in your portfolio, that's a great
Right.
option.
Yeah. Because it's possible that could go into a range here of 80 and 100 and stay there for a while.
Mm-hmm.
Yeah.
Yeah,
This,
especially with, with people not traveling and some of those fundamentals that
yeah.
come into play with the oil markets.
Well, one thing that's benefited the oil is that they've gotten control over the supply with the rigs being shut down and the frackers being shut down, and OPEC is actually cutting. So the supply side is looking kind of L-shaped. And the demand, people are hoping, because when people get out of their homes, they're going to drive a lot with cheap gas. And so those two fundamentals obviously have helped it get to here. Now, what makes it get to the next level is the question.
Mm-hmm. Yep.
But this next one, we don't have to worry about any slow-mo because this is one of the favorites of all the momentum players and all the people who are looking to the future. And this is PayPal.
Mm-hmm.
And
So this is another one where, pretty strong trend coming into March. We had the sell-off, not quite as steep, and then a pretty quick resumption of that uptrend, and already, well into new highs. The gap up on earnings, for me, it's nice to kind of let it settle out after the earnings announcement. So again, when I see the uptrend has resumed, a little bit of a bearish engulfing pattern here, but this hammer on the 27th has held its lows, which is a strong sign. And I'm not in this one, but that would have been the entry on the 28th, kind of just like Amazon. For me, would be above the high of that low bar with a stop just below, giving it a little bit of room, 50 cents below lows of the gap.
why don't we look at Square, SQ, because that's another one that people are saying good things about for the future.
Yeah, similar pattern to Amazon, Amazon and PayPal, not quite in that new high territory, but again, just looking at, what's it been doing in the last couple of months, how close or far is it to all-time highs or to the most recent major high, and then looking for, getting in on the pullback gets you positioned for days like today where things really rip. One little trick I'll use if I do get the option going is to close. I like to close out my directional options at the close of the day, just to prevent, if it does go sideways at 88 for a couple of days, I can kind of protect some of that time decay.
Right.
But otherwise, yeah, positioning in the trade before the breakout really, positions you well for these kind of days where you're up, $5-6 in a day.
Sometimes it's good if you can see a price like around 80 and you buy a call at 80, and then you get the pop, and then you can sell the 90 call against the 80 and get all your cash out and get a free look at a 10-point spread.
Yeah.
That's another way of legging into the call spreads that, where you start out with an outright call, goes your way, you sell the out of the money call to get your money back, and now you get a free look at the movie, which is not bad.
Yeah, and if you're going to use spreads like that, I would say pick one or two that really, you can really understand and get a good grasp of, so
Right.
that as you look at the different stocks, you can really hone in on exactly what you're looking for, and then put on those spreads and kind of repeat that process through the different stocks.
Yeah, anytime you can reduce risk and still stay in the game to make a bunch of money, I always think that those are pretty good strategies,
Yeah, as long as you're not capping your gains, I'm all
Right.
for it.
Right. Right now we're at halftime, so let's talk, if you would like, about some of the markets and stocks that you're looking at, and maybe some examples of what you're kind of focused on right now.
Hey,
Yes.
Tim, hey, before we get to that, someone from the live audience asked what software you're using.
So this is Thinkorswim, which is part of TD Ameritrade now.
Oh,
So
okay, great.
Thinkorswim charts. Yep.
Oh, okay, I see the logo now. Okay, thank you.
Yeah, you bet. And none of the stuff that I use to analyze my trades is proprietary or special. So if you're on TradeStation or NinjaTrader or what have you, Sierra charts, I like to keep things pretty simple. We mentioned Amazon earlier. I have that position going. Another one I'm in, CDNS, for a lot of the same reasons. Looking at how does this stock relate to the S&P or the NASDAQ in this case, traded on the NASDAQ. And we can see that, okay, well, CDNS is already into new high territory, whereas the NASDAQ is not. So it's got relative strength. It's got a pretty strong uptrend and series of higher highs and higher lows. It's already released earnings, so I don't have to worry about that. And then it made its pullback. And then again, just getting long above the high of the low bar here and then stop below the low. And then as far as managing the position, I talked about briefly about trailing swing lows. So if the market were to pull back here, and then once it goes up and makes a new high, that's where I would bring my stop up underneath that swing low. And then the other thing I like to do to trail is to trail each candle's low, and I'll do that with like a third of the position. So again, the nice thing about stocks or trading multiple option contracts is if you're able to scale out, you can kind of reduce some of your risk along the way and lock in some of those gains. I don't like to take too much off too early because you don't want to have 100 shares and take 90 of them off for a $2 gain or even a 2R gain, like twice your risk. You want to try and keep on as many shares as you can. And that's where trailing the swing lows is super beneficial. But I also don't want it to go, from 85 up to 95 and then come back and stop me out of the whole position. So taking a third off by trailing the daily low in this case is what I'm doing. And then I'll trail the swings from there.
Yeah, because the stop would be so low, your only alternative to try to reduce risk up here is to do some trimming, huh?
Yeah, that's a great way to look at it. You can use things like the fib tool, and you could trail the 60-18. That's a little bit arbitrary. I like trailing the daily candles because if the momentum is going to change temporarily, it's going to start with breaking the low because the pattern has been to make a higher low every day.
Right. So the first time it breaks the low would be your first signal that something's up.
Yep.
Yep.
Yeah, exactly. And then from a money management perspective, just taking 25 or 30% of the position off, locks in some gains. Now you've got fewer shares to have it go against you, reduces your risk, and you still got a bulk of the position to return to that new high.
Yeah. You're reducing your leverage. That's great.
But you can get into trouble if you take too much off. And so looking at your position as it relates my gain to my risk is a really good metric. So that R multiple is what that's called. And then that can help you with your expectancy, and then looking at your drawdown is also helpful.
What else you got cooking?
The only other swing at this point I've got is a short going in ACGL, was short below the low of the high bar and stop above highs. I took a little bit off, again, the 30% off actually yesterday when it broke above the prior day's high. But when we're kind of in this position on the SPY where we have come quite a ways, we're still certainly looking bullish, making higher highs and higher lows. I always like to have at least, some kind of short on. So right now it's, 2 longs and 1 short. Sometimes it might be, if it's a flat market, I might have 5 longs and 5 shorts on. But, you can kind of adjust your portfolio based on what the market looks like. If it's really bearish looking, you might have 3 shorts and 1 long. But it's always nice to have, one position in the other direction, even if it is a really bullish market, to have a short going as well.
Okay. Well, like I said, let's go back to the list here and get through some more of these and see if there's anything else we can discuss here. The first one is COUP, I'm sorry. And this is Coupa Software. So this is probably way up in price.
Yeah, this is another one that's really strong uptrend. They do have some earnings coming out here in next week. So I would just be careful if you're going to do some kind of strangle or spread ahead of earnings, okay, but I wouldn't be completely directional going into earnings, just because to me that's more gambling than managing or controlling your risk.
And that 238 area starting to look a little bit scary as far as if the thing starts rolling over and takes out the 220?
Yeah, one of the things, if we consider just today's candle, it closed bearish. It wasn't able to take out that 238 high. But then if we go to, well, we'll go to NASDAQ, and we see, okay, it did make a new high. Same with the S&P, new high on the day. So, Coop not looking super exciting in terms of that relative strength.
Yeah, it's one of the ones that obviously, once we had the big dump, everybody jumped back in. The semis, the tech sector, those are the ones that have really snapped back the most.
Mm-hmm.
Here we have one that is snapping back, but people are a little bit suspicious how far it's going to snap back, and that's Bank of America.
Yeah, this one's kind of in that trend similar to the airlines and the oil. Tons of gaps, throughout this last couple of months. Not too far off lows. So from a speculative play, I mean, it's a little bit in that limbo, but I'm not too much for long-term speculative plays as opposed to just trading something that's near a breakout of highs or near a breakdown of lows. One thing it has going from a bearish perspective is, today's candle, if we were to break its low, that would solidify this as a lower high, and we have a pretty clear uptrend developing. So to be able to short below the low of the high bar and have it get 1 or 2 days of follow through could really send it, back down maybe to the $20 area.
Yeah, because people are definitely going to be wondering as the second quarter comes to a close, whether these guys have put enough loss provisions on the side, and also how are they going to make money in this tight spread environment. So there's some questions out there, I think, and that could lead, if this 26 holds up, to maybe a more consolidation between 20 and 24. Huh?
Yeah, and if I go back to, this uptrend back here, we can see a similar thing happened where in this case, we had double top, sold off a little bit,
Right.
had a little bit of a bounce that was, shortable. And then when we came down and broke the swing low and the uptrend, we did get 3 or 4 days of, follow through. So you might see that same pattern happen here. When a trend becomes so clear, like, if I were to go back to that Amazon just for a moment, when a candle like this forms a very bullish signal bar, when that's taken out, like when the opposite of what's expected happens, that can be, a
A big
really
sign.
solid entry in the other direction, especially if you get a little fake out. If you break above the candle's high and then it rolls over and puts in a bearish engulfing candle or pattern, you catch a lot of people
Sleeping.
Yep,
Yeah.
exactly.
And of course, there's plenty of people who could come out of this because you can see how many people have gotten into it.
Yep.
Whereas a lot of people are saying that the epicenter stocks, the hotels, the airlines, the oils, and the banks, do have a run ahead of them if things normalize out the way people think they could. So, but again, that's not as exciting as working with PayPal or something like that. Do you find, Tim, that you are mostly looking in certain sectors? I think people would like to get an idea on that because obviously the semis and the tech sector and those, and maybe even healthcare, those give you a lot of volatility. Is that kind of where you're seeing most of the opportunities for swings?
So the way I set up my scans is to do searches or do a scan for stocks making 52-week highs, and then a second scan for stocks making 52-week lows.
Okay.
And then I'll add those to my Excel list and then return back to them in 4 or 5 days, see if they've pulled back. And so that's how I kind of compile my general watch list. So it's a broad spectrum of sectors and industries. If I have 3 or 4 stocks that are setting up nicely, I try not to enter, multiples if it's the same industry or sector. I just try to pick the strongest or the weakest one if I'm shorting.
Okay. So you're really looking at the 52-week high list, and you're not really concerned what sector it's in.
Yep. Yeah,
I got you.
exactly.
I got you. That's a way to go for sure. Okay, well, we have casinos supposed to be opening this week, but I don't know with the riots if that's going to be a great time to open. But WYNN is the next one up, and it had a pop, and then today it faded a little bit. But what are you thinking here on Win?
Yeah, just like the bank stocks and the
Yeah,
airlines, looking
yeah,
real similar to oil as well.
yeah.
You know, kind of apexing or approaching that 84 point, if you will. That at this point, if you go back to what was the trend before the consolidation, well, it was down. So that makes a case for a breakdown.
Hmm.
Um, the sell-off from 150, basically cutting it all the way down to 35 bucks,
Right.
you know, makes it a longer-term speculative play to the upside, but you've got a roller coaster ride to go through before it returns to 150.
It'll be a while before it hits your 52-week high list, huh?
Yeah, and so if you look at your longer term portfolio and say, okay, you know, if I buy this now at 85 and, you know, if I have to sit on it for a couple years, you know, what's the opportunity cost of having that capital tied up
Right.
versus, you know, putting it into some shorter term plays that can, you know, give you returns sooner, or going the other direction and putting it into a, you know, Vanguard growth mutual fund that's got a whole basket of stock. So
Right.
trying to stay away from that middle ground is what I focus on.
Yeah, if you're looking at individual equities, this might not be a great candidate, but if it was part of an overall consumer discretionary fund or something like that, it might be okay.
Hmm. Yeah, really having a purpose for your various accounts that you have uh, really helps kind of integrate everything together with your trading.
Well, the next one really got nailed. It's Boeing, and God, it's been a great opportunity to trade though, because it went from 90 to 180, then it went back down about 100 and change. Now it's back at 153. This certainly has got a lot of real estate between its long-term averages, which is up in the 280 to 320 area, and you're trading down here. So, how do you feel about this one? Maybe there's something here or no?
Yeah, I mean, out of all the ones we've looked at, this would be one that I would be the most speculative on in terms of buying for the long term.
Yeah.
It's probably made one of the biggest drops. The trend going into March was not the greatest, but
Mm.
Boeing is a pretty strong staple, and you kind of have to ask yourself, okay, if Boeing went away, uh, you know, we'd have some pretty big problems beyond just you know, making airplanes.
Yeah, because they're a defense contractor, and
Yep.
that's what people are starting to come around to. That's why they don't want to sell it at 75 or 100. They want to start thinking about putting it away
Yep.
because the budget is what 700 billion for defense. So I'm sure there's a bite of that that goes to Boeing, huh?
Yeah, it's pretty massive.
Yeah. So, but anyway, your feeling on it is as far as what you do, it wouldn't be much of a candidate right now, or
This would be one that I'd be more bullish on. You know, if you're looking at, okay, if I buy it at 150 and it goes to zero, and then the other option is it goes to, you know, 300, that's my 1-to-1. If it
hmm.
goes to 450, that's 2-to-1. So there's definitely more upside potential in Boeing than these other ones that we've looked at.
Let's switch over to another a Ferrari, which is NVIDIA. NVDA. And of course, that's pretty much like all the semis and all the tech, way up in the ozone here. And the ozone just keeps going.
Hmm. A little bit of a stale or stalling,
Hmm.
kind of coming into the earnings and then coming out of it, which isn't super appealing, but the uptrend is holding. And so if we do see, you know, I could see Nvidia up at 400 certainly by the end of the summer.
And that's pretty much it. Do you think that 320 mark looks like a pretty big one, huh?
Yeah, I mean, when you get these big intraday sell-off and then rally,
Hmm.
and then it can break above that candle and hold it, That's a pretty bullish sentiment. It just needs to not get pulled down. Let's say the broader market sells off the rest of this week or next week. We need to hold this low,
Right.
because this is the current swing low, and if it breaks that, all of a sudden your uptrend is now in jeopardy.
How about Salesforce? Just throw a couple out there that people didn't write down. CRM?
Yeah, this one's again not quite as exciting because it's kind of in this middle ground. As a
Yeah.
long-term speculative play, it definitely doesn't excite me. There's relatively stronger stocks out there to choose from if this was in my basket of bullish stocks that are in uptrends, especially because you have a little bit of a double top here, or at the very least some consistent selling over these 180 level. It's sold off pretty decent, either to close at lows or close well off of its highs. So not the most exciting one for me.
Here's a couple that are kind of exciting. Rather than talking about the casino, people had an interest in Wynn, so there's some casino interest. There's three stocks that are in the online gaming that have really been going nuts. So one is DraftKings, DKNG. Let's just take a quick look if it doesn't take too much time.
Yeah, let's go out, do a weekly first, get the bigger picture. Really just looks like just IPOing.
Yep. It's pretty new to the market.
Yeah. So, with something like this where it just made its IPO, you can do about $20 or so,
Right.
Doubled in price. You don't have much of a base up here. So looking at maybe the $30 level if it were to sell off, and if you've done your homework on what the company is going to be offering and what you think its valuation might be.
Right.
Otherwise, buying a breakout can be okay. You just have to establish, am I going to buy this and hold it, or am I going to put a stop in some place? I mean, this is the last swing low down here. That's quite a ways away. But if your valuation is, 80 or 90 or $100 a share, okay, that reward to risk, getting in at 45 with a stop at 25 and a target of 100, now your reward to risk is more in check.
How about Penn Gaming, PENN? That has more data.
Yeah, so this one really making a big sell-off below, its trend from last year, and a pretty strong rally as well. It's still a sub $50 stock. This rally, so when you look at a stock like this, looking at what happens when it does break out of a consolidation area, it got a pretty big run. So now we're in another consolidation area. So if you look back at what's occurred from the last breakout, if we go, $20 up to $30, well, this consolidation break could push us up to 40 pretty quickly. So seems a little bit more volatile and could really, make its way back up to 40 in a jiffy. But I would watch this swing low. If this one gets taken out here about 28.30, then I would want to see it. If it dips below lows, it would need to come back into that $30 price range pretty quickly. Like it would need to form some kind of a hammer and show that, okay, there was some selling, but it was overtaken by buyers and it's right back at the $30 or $31 level.
How about the biotech, IBB? Is there anything going on with those? Because, some of these went up like Gilead, then they went way down. Then you had Moderna, way back down. IBB, I think. Isn't that it?
BB, yeah.
IBB, biotech.
There we go.
There you go.
This is one that's really setting up nice for a breakout. It's already broken its highs from February, March, and so a little bit of a consolidation or a triangle. So yeah, this one setting up for a buy above even today's high, just a little ahead of the 136 break to maybe target. If we look at the distance from, okay, 136 and this low down here is about 126. So maybe project another 10 points, shooting for 145, 146. If we can get a break here. Yeah, I like that one.
And why don't we just try one metal, SILJ, silver junior miners. That was something that was going pretty good. Backed off today, but what is it telling us?
When with some of these commodity or precious metal stocks, you really got to be a little careful, just because they can get a little squirrely, especially for as cheap as it is.
Right.
I would say doing the breakout above 1277 would be the play, just because that's going to solidify, okay, we're in new high territory. As far as long-term speculative, it's kind of all over the place. Same with gold and some of the other commodities.
This one was fairly orderly, though. After the pullback from 9 to 6 or so, you could have had a trailing stop on that and had a pretty good ride, huh?
Yeah, and it looks like it's, some of the precious metals hold their retracements a little better, just kind of eyeballing it. I zoom in, we kind of have a 50% retracement here. So, pulling back, draw up the next 50% retracement.
Right.
So if we come down to 1150, maybe target the $13 area.
Right. Yeah.
So when I see those kind of patterns, like even coming back here, seeing it hold, okay, it touches the 50, trades up to the negative 23, you can kind of project that forward and say, okay, regardless if there might be some hedge funds or computerized algorithms trading this stock, or maybe it's just following that protocol in a really orderly way, I would continue that way of looking at the chart as it continues its trend.
Yeah, some people are thinking with the economy possibly turning around, and I think this is used in batteries and things like that. So there's an industrial play that came back into the picture after, of course, we went into the abyss back in March. Let's switch back over to the list and go over to Morgan Stanley, whose analyst did a pretty good job.
Yeah, I think it was either Morgan Stanley or Bank of America said that this would be the low back here in March. Obviously, that could still be broken, but so far they've been right.
Yeah.
I don't think the banks are going anywhere. Again, if the banks disappear, we've got some bigger problems than the market.
Right.
Lots of gaps in Morgan Stanley, but we were in this sideways consolidation here, and then made a little break, and then just pulling back briefly, but not my favorite for a long break. If we were to sell off below the swing low here, you can make the case for a short below the uptrend, kind of back into this 35 to 40 area.
Right.
And Morgan Stanley, it made the gap up, and then even before we had the virus coming into play, it put, or at least the early stages in February, it kind of put in that lower high and started rolling over.
Right. What about Charles Schwab? CS. What is it here? SCHW. SCHW. I'm sorry. In the same area, right?
Yeah, pretty much in the same boat. Not a lot of long-term trend going on. And you kind of have this widening formation back here, and then a little bit of a down channel, the COVID sell-off, and then just a whole big jumbled mess right now.
Supposedly they've gotten a lot of accounts, so that might be helpful in the months ahead.
I'm wondering how all of these brokers they're all doing free stock commissions, or they have been for, I don't know, the last 6 months. They ditched commissions.
Yeah.
And that certainly makes it easier for folks to buy and sell. I don't know how that's affecting their bottom line and opening accounts.
Yeah. Well, I think it's helping opening accounts, and I think there's still enough other ways that they make capital that it's worthwhile because the assets under management are just trillions and trillions and trillions.
Yeah.
Next
Yep.
one up is Electronic Art, EA, and that's a little bit looks like it's getting on the bicycle, huh?
Yeah, one thing that stands out to this one is some of these candle ranges are pretty big. Like this guy here, 6.5 points, almost encompassing the, if the range from a 110 to 120. Well, 6.5 points is 2/3 just about of the range. So if I were to get in, I would want to see, maybe we get a pullback just a little bit lower, so we kind of touch this 120 level or dip into it. Because if I have my stop all the way down here, well, then a 10-point move or a 12-point move from where we're at 122 would be about a 1-to-1 reward to risk. So it's nice to see when the candles are a little bit smaller as it relates to the range that we're in. So not my most favorite, but a pretty strong base or consolidation that's been put in. And if we zoom out, we can clearly see we're back above the February, March highs.
Yeah, it looks the strongest out of Take-Two and Activision, so it definitely looks the
Yep.
stronger out of the three.
Yeah, and if you go into that sector and you see 4 or 5 of those stocks all on your radar, yeah, picking the strongest one is a great way to become relatively strength within that sector.
Well, the last one is a poster child of Tom Lee of Fundstrat's concept of buying the epicenter of the crisis, and it's RCL, Royal Caribbean.
Hmm.
And looks like it's trying to go somewhere.
Yeah, looks a lot like the airlines. I think both are going to see a lot of time down here in kind of a roller coaster ride. So
I got you.
not something that I'm super excited about.
You're not looking for that 110 gap to get filled, 100, 110 gap to get filled out tomorrow morning?
No, I don't think there's going to be an overnight rush to start going on cruises unless we end up with the ability to do essentially instant testing and we have enough of the coronavirus tests or
Right.
COVID tests to where, oh, you want to come to a concert or a sporting event and everyone can be tested as they're entering the parking lot. Now all of a sudden you could see potential for these bigger events and flying, traveling, cruise ships and things to
Or
rise.
or deals that can't be turned down. There's a guy in Vegas downtown. He owns the D Hotel, and he's giving out
Okay.
1,000 airline tickets. So I guess if you're a good enough promoter, maybe you could get people to go, right?
Yeah. There's certainly a lot of deals right now, that's for sure, especially in the airlines.
Well, Tim, we are at the top of the hour here, so I think it's a great time to just reintroduce yourself and the company and make sure people are as clear as a bell on how they can contact you to take advantage of your information, which I think is very extensive.
Yeah, absolutely. So like I said, I blog over at eminimind.com, talk about day trading futures and swing trading stocks. You can reach me by my email, tim@eminimind.com. Always happy to chat stock or non-stock related. I got the YouTube videos, so you can search eminimind, but yeah, email is typically the best way to get a hold of me.
Okay. And it obviously was great to have you here, and hopefully everybody can take advantage of that and go over to the ways of contacting you and get it done. You got a very specific way of trying to approach markets, so it really adds a lot to people's toolbox, because there's people who use many different methodologies, and yours is very unique to yourself, I think. So that's a good thing.
Yeah, and if you can keep things consistent in how you fundamentally kind of approach the market and your process, then that adds a lot of stability to the long-term trading career, whether you're doing it part-time or full-time.
Sure. Well, just to say, I'm Jim at optionprofessor.com, and every week I have a market update that covers the stock market, bond, the US dollar, crude oil, gold, and agriculture. So there's a lot to learn every week, and some of our ideas I think have been very, very accurate and very, very good. So if you'd like to get into the queue and receive the free weekly update, just go to optionprofessor@gmail.com, and we'll make sure the next one goes out to you. Right now, I'm going to be sending it back over to David. David, thanks a lot, and take it from here.
All right, thanks, guys. Lots of good info today. So just a quick reminder to everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. You can also go to TimingResearch.com to get access to the archive of this show as soon as I can get it posted, or any of the past shows. And I just want to thank my guests again for today. Tim Racette of eMediMind.com, and Jim, the Option Professor at OptionProfessor.com. Thanks, everyone.
Thank you.